Hey there, Kenneth French of Vast Voice, telling business secrets to entrepreneurs. We're very, very happy you stopped by. Either you're going to watch this or listen to this because you want to take your business to the next level. You're probably an entrepreneur who's either just starting out or you've been around for quite a while and you want to take your business to the next level. You're probably a real estate investor, maybe even a real estate agent, maybe a professional or of some sort, professional advisor of some sort. And well, you are stopping by because you need some valuable advice from one of the top industry leaders there is. Anyway, thank you very much. Once again, Kenneth French, Vast Voice, telling business secrets to entrepreneurs. Really glad you stopped by.
The definitive guide to cost segregation studies. You might not know what cost segregation studies are, but after this presentation, after this conversation between us, you will. You're going to understand the impact, the positive impact to real estate investors, and well, probably you, because you're watching this based on the fact that you're a real estate investor. You're probably pretty well heeled, and now you want to learn how to lower your taxes, all legally, et cetera, based on the stuff that you've already done. It's basically free money from the government if you really think about it, as long as it's conducted correctly. My name is Kenneth French with vastsolutionsgroup.com. As you can see, we're also a vast asset defense team company. So what I would say is this is going to be the next, for the next maybe half an hour, you're going to learn a lot about ways that are going to lower your taxes. And at the very end of the day, what I'm going to say is go back to your tax provider. Sure, you can come to us here at vastsolutionsgroup.com. We've been doing business since 1969, but really what I'm going to say is go back to your tax provider. That tax provider might be able to help you because they know your situation better than anyone. If they don't understand cost segregations, they don't understand what you're talking about, or they don't even like them in general, run. Get a hold of us here at vastsolutionsgroup.com. So here, first of all, here you see, well, it says my wife, long-term value, and me, and not so much. Meaning the long-term value, short-term value. That is not my wife, by the way. She would not let me put her image here on the presentation. But really what I'm doing is doing a point by having this slide here. So I want to illustrate what is depreciation. So here, we got married some years ago, quite a while ago, actually, 1993. So although I don't look that old, right? We got married. She holds long-term value. So let's just say the government says, hey, she's still worth pretty much during those, all those years since we've gotten married, she still holds her value. And me, as she will tell you, my lovely bride, will tell you that I've lost value very quickly. So as a result, well, I'm in the first year, let's say, where I'm losing a lot of value after we got married. Well, the government, believe it or not, gives, well, in this case, the owner, let's just say, of me, well, money or tax, if you will, rebate, if you will, or really what's called depreciation. Because I'm losing value so quickly, the government says, wow, you're losing so much value. Well, what's going to happen is, well, you're going to get a little bit of money back as a result. Instead of the normal long-term period, or what they call straight line of depreciation, right? It's happening all at once, let's just say, or in a short period of time, thereby, because you're losing value, the government gives you money because you've lost that value. Instead of over a long period of time, it's over a short period of time. So what that means is you end up lowering your taxes because your value has been diminished in the first year, second year, third year, as an example. So there you go. So my value has, well, diminished. My wife's value still long-term. So therefore, the IRS allows, in this case, the owner of me, to get a bunch of money because my value has basically been bonus depreciated or cost segged, meaning, it's been cheapened, if you will, thereby the owner gets money. Same thing with property. And we're going to go over the specifics. And that was just a kind of a funny way of kind of explaining the difference between, someone who's depreciated over a long period of time and someone who's depreciated over a short period of time. Generally speaking, the person who's been depreciated over a short period of time, or the item that's been depreciated over a short period of time, ends up luckily helping the owner with taxes. vastsolutionsgroup.com. By the way, that was tongue in cheek. Hopefully that did help a little bit. vastsolutionsgroup.com have been around since 1969. We do tax, finance, and artificial intelligence to help entrepreneurs to lower their tax liability. Yes, 1969, obviously we weren't vastsolutionsgroup.com, but we've had different iterations. 2006, I took over and we became vastsolutionsgroup.com. We've been doing business in all states, by the way. We were focused primarily back in '69, etc., in Washington State, the sleepy little town called Bellevue, Washington. We did at that point, insurance. We did finance, kind of the traditional old way of doing business. 2006, I took over. We started using artificial intelligence in 2010. Had our own model, if you will, or platform in 2018 that we call Einstein, and that's really what's helped us to really become a leader in business, in taxes, and finance, based on the fact that we've been using artificial intelligence. Now everyone's using artificial intelligence, or trying to, or saying they are, to lower tax liability, or at least to help themselves in business. So people are catching up to us, and luckily, because we've been doing it so long, we know how to deploy it pretty darn well. By the way, vastassetdefense.com is run by Bob Bloom, who's one of our teammates. He's an attorney. He's been around for years, and he's an asset protection estate planning attorney. So now we do tax, finance, artificial intelligence, in line with also doing asset protection estate planning, again, nationwide. We even have offices now, Canada, England, and Puerto Rico. All right, let's do a real quick introduction to cost segregation. Again, bonus depreciation, whatever you want to use it. Sometimes they call it paper depreciation. So let's go over the specific definition, maybe a technical definition of a cost seg or cost segregation. Cost segregation is a strategic tax planning technique, which it is, or strategy, that allows real estate investors, probably you, hence the reason you're watching this, listen to this, to identify and reclassify certain components of a building. We'll get into those certain components of the building just a little bit, as real property rather than as personal property versus real property. Therefore, moving up, quickening the depreciation or accelerating the depreciation. Benefits of a cost segregation. Primary benefits include immediate tax savings now, because remember, my value is short, right? So therefore, I get a lot of money back from the government to my owners as a result, right? And what I would also say is, it really depends on the circumstance. Go talk to your professional advisor if there are any issues. But again, call us if they don't know some of the elements of cost segregation. By the way, I'm going to mention a couple more things about me, myself. I've been, I'm a three-time author, almost a four-time author, by the way. I've written a number of books. We're going to be talking about a bonus here at the end, that you're going to be able to get one of my books for free if you just email us. I'm a former Forbes.com small business contributor. I've been doing this for longer than I would like to admit. I was retired for 10 years, came back in the business because the artificial intelligence world, I knew it was going to, pop up in something big, and that's my passion, that quantitative computing. Quantum computing. Okay, so in sum, I'm just going to say, in sum, cost segregation is a powerful tool. It's a really powerful tax tool that can totally improve financial performance for a real estate investor. All right, very big component. I put this really for me. Yes, residential investors can take advantage of cost segs as well. Again, cost segregation, bonus depreciation, paper depreciation. It is possible. A lot of people forget that. And it is possible. We'll get into some of the specifics here in just a little bit. It's all about money. What's really important is, yeah, it's about money, but it's a big component of tax planning. When I say it, mean cost seg. Cost seg in the wrong hands, by the way, makes it very, very difficult to make sure that it's going to succeed, because the idea, the concept of a cost segregation study makes a lot of sense, but if it's not a component of the overall tax plan, it will go awry. So what I would say is, usually a cost seg is done as one component of the overall tax planning process. And even if there's two different groups, because usually there's two different groups that do the two, the cost seg group, the group that does what's called a study, has to do it in line with overall tax planning. Because sometimes just doing the cost seg doesn't make sense. Sometimes the cost seg does make sense in the overall plan. So you have to do them really hand in glove. You got to make sure that they're done together to really optimize planning purposes per year, and then really for the life of the building, as an example. Sometimes, by the way, cost segregations don't make sense if you only maybe even do a product once a year and once every 2 years. Generally speaking, if someone's doing, a bunch of real estate investing on an ongoing basis, really with commercial, but also with residential on an ongoing basis, maybe a couple of years, usually makes a profound amount of sense. So bonus depreciation, what are some of the items which I mentioned earlier that we're going to talk about? Appliances could get bonus depreciation or can be part of a cost seg study. Autos, as an example, can be part of a cost seg, and machinery, heavy machinery, as an example. So instead of waiting, whatever, I'll just say, just to be very simple, instead of being 30 years of um of depreciation, maybe you move it to 10 years, and so it's depreciated really quickly. So it's lost its value. Let's say the car has lost its value. So the government says, we're going to give this person some money, a lot of money potentially. So it will lower your tax liability as a result. Hence the reason bonus depreciation really does work in so many different instances. Here, what we do is artificial intelligence, again, as we mentioned, tax finance and artificial intelligence for small business owners. So what we do is we utilize artificial intelligence with our cost segs, with our bonus depreciation projects, because it helps meaning our Einstein model platform helps to with figure out the tax liability based on the artificial intelligence of our model. So what does that mean for us? And by the way, for more and more people and more companies, more and more platforms that are using AI, as it will, improved accuracy. Usually you're going to be a little bit more accurate because you're using artificial intelligence. Number one. Number two, enhanced efficiency. The fees come down. Fees could be pretty expensive with respect to bonus depreciation projects, cost seg studies, et cetera, et cetera. Because of artificial intelligence, you can usually more quickly identify something that can be depreciated a little bit differently than otherwise, and increase accessibility. Let's just say someone has whatever 20 items in the property, just to be very simple. Usually the AI can reach for the items a little bit quicker, and therefore, hence the reason we say increased accessibility. All right, have to choose a good cost seg professional advisor. There's a whole bunch of them out there. They're small to mid to big. Well, it depends on the circumstance if it's going to fit your situation. Now, let's just say you have a whole bunch of projects all going at once. Sometimes a big advisor might make sense. Sometimes a small advisor might make sense as far as the cost seg. Depends on your circumstance. Some of the things to think about with respect to finding a good cost seg professional advisor in your neighborhood, if you will. Expertise. You got to make sure that someone's been doing it for a while. Usually it's a CPA, a certified, someone who's certified and who understands either taxes or understands cost segs. It depends either way, anywhere along the spectrum. By the way, even sometimes these things called EAs, basically they're think of them as almost CPAs. I'll just overly simplify. Those people can even do cost segs, but really what you're looking for depends on your situation. So if you need expertise, you probably want to find someone who's been doing it for a while. A track record. Someone who's been doing it for, let's say, a year might be someone who would provide a different service than someone who's been doing cost segs for 10 or 15 years. Someone who specializes in, let's say, the real estate industry you're buying is, or piece of real estate you're buying is a motel. Those cost segs might be different than someone who's buying a residential property. So I would say industry specialization within real estate may make a difference when you're talking about cost segs. What I would say also, this is a very big component, ongoing support. If you're buying properties on an ongoing basis, you want to have a relationship with someone who can help you at a moment's notice. Cost segs sometimes are, get forgotten about. It's another tax strategy, but it can save you a lot of money. Here's one for you. Now, people don't realize taxes are usually going to be the biggest expense for usually an employer or a real estate investor. Because let's just say you're in California, you have 40, 50% taxes, long-term, short-term, whatever the case is. So what you need to do is think about that when planning out your year as far as time allocation, and then also when you're looking backwards to do your taxes. By the way, seldom will I say look backwards to your taxes. You're supposed to do proactive planning. We believe that here at vastsolutionsgroup.com. We don't believe in driving down the road looking in the rear view mirror like so many tax professionals do. Oh, here, I got to be careful about ongoing traffic, but they're looking in the rear view mirror. April 15th comes, what happens? Well, they're looking in the rear view mirror, boom, you have to write a check. We should be doing is looking forward, looking to see what potentially are the pitfalls, truly what you could hit, or who knows what is going to happen in front of you. Do tax projections. That will help you. Now, specifically with cost segregations, it will really help you because it could potentially lower your tax liability to a certain extent to even make it so you have a loss if you're a real estate investor, depending on the circumstance. So, again, there's two ways of looking at cost segs. You could look at it now, and you could look at going backwards. It's much better to look at the situation now, and then also projecting forward, which is a hybrid of the two. Common mistakes in cost segs. We get asked that a lot because we have a lot of CPAs and professional tax advisors that come to us. Hence the reason we are growing to the extent we are growing, having offices in every state. Improper asset classification. Sometimes you can put in a property or a piece of the property in the wrong class, therefore not getting the right depreciation. That can cost you, number one. Number two, if you don't have good documentation for the thing that you're trying to depreciate a little bit quicker than otherwise, that can cost you. That can even help you with an audit or get you into an audit. If you don't have a full blown cost seg or bonus depreciation study, that can hurt you. And also, if you have old school methodologies, because cost segs are always changing, sadly. By the way, they're even changing. I mean, they're changing by the moments, seemingly, but you have to just obviously you have to keep up to with what's going on an ongoing basis. Let's talk about the future of cost segregations real quickly. There are tons and tons of technological advancements worth noting. Again, some of the people watching this might be tax professionals who are wondering about cost segs because some people forget about cost segs or they're not in the real estate world, which we are here at vastsolutionsgroup.com. Hence the reason we are keeping up with cost seg law, because if we don't know cost seg law, I mean, we got issues because that's 93% of our clients are real estate investors. So we want to make sure that we understand cost segs. Tax policy changes, as I mentioned, those are changing on an ongoing basis, and you got to know what's going on with respect to cost segs and bonus appreciation. Industry collabs, man, there's a lot of collaboration. And when I say collab is there's a lot of good things going on in the industry as far as cost segs because it's so complex. People are now combining forces, which I think is a good thing. I would say that's a good thing, especially as technology kind of rules the roost as it relates to taxes. By the way, that's the reason we decided to get in, using artificial intelligence back in 18 and then 2010, because we knew that technology was going to move some tax professionals to the side, and we, as a result, knew that we had to, develop technology as far as artificial intelligence goes, because we knew that we would be able to, with a lower number of staffers, would be able to do cost segs and new kind of technological advancements as far as tax liability, lowering tax liability because of technology. AI credit as an example. We are doing a lot of artificial intelligence R&D credits, which is a subsection, if you will, of cost segs, at least to a certain extent. Some people construe it as. Okay, let's jump ahead to compliance challenges. There's going to be a lot more compliance challenges, even though some of the regulations are being lowered. But with respect to cost segs, because they're changing on an ongoing basis, some of the compliance is actually being a little bit more thorny, as a matter of fact. Now, it sounds crazy, but that is the case going forward. The difference here, I just threw this out there. I mean, this is kind of I think it's a no-brainer, generally speaking, depending on the circumstances. Without a cost segregation study here, it's going to be more expensive than if you do a cost seg, meaning you're going to be able to lower your taxes more because you have a cost segregation study or bonus depreciation put forth. So cost segregation again, once again, a conclusionary comment. Cost seg is a strategic tax planning tool that allows real estate investors to accelerate the depreciation. The value of me, as an example, goes down very quickly. Well, luckily the government gives you money for allowing that because I'm of limited value going forward. If you have any questions about this presentation or anything we do at vastsolutionsgroup.com, remember we do tax, finance, and artificial intelligence to lower tax liability for entrepreneurs. Offices all over the country. Now, what I would say is go to this website. Go to the website if you excuse me, I have a little bit of a cold. There we're going to have tons and tons of tools to help business owners, entrepreneurs lowering tax. I mean, we have even a portion on the website where, as an example, if you're doing a bunch of innovative, cool stuff in your business and you're an entrepreneur, usually real estate, let's say you're using Chat GPT or, Claude or what have you, you can be getting paid for the government. You can be getting R&D tax credits, or what we call AI R&D tax credits. Simple. Simple. And by the way, you can even look back 3 years and get back some tax credits. You like that? You've already done the work. You've already spent the innovation dollars. Well, the government can give you money. And that's federal and state dollars, by the way, both. Anyway, once again, this is Kenneth French. Stop by vastsolutionsgroup.com. This has been a pleasure. Hopefully, we've added some value in the short time we've been together. I know I've had some fun. Once again, Kenneth French at vastsolutionsgroup.com.